volatile share markets, but I expect the outcomes for property markets to be quite positive by comparison. At times of extreme uncertainty and volatility, Australians tend to retreat to the solidity and relative safety of bricks and mortar. We saw that the last time there was a global crisis impacting on our economy and causing the federal government and the Reserve Bank to take special action, and that was in the wake of the global financial crisis in 2008. At that time, some economists predicted a real estate crash, but in fact, real estate prices rose, and quite strongly, in 2009 and again 2010. One of the factors that will keep residential real estate solid this time, amid the virus crisis, is the general shortage of homes in Australia, amid times of strong demand from owner-occupier buyers, including first home buyers. There was relatively little construction of new dwellings in 2019. Vacancies across Australia are very low in most locations, and listings are well down on the levels of recent years. One measure showing the general shortage of homes is the vacancy rate figures published each month by SQM Research, and their latest report came out today, and it shows that for the first time in many years, every one of the 8 state and territory capital cities has a vacancy rate below 3%. In recent years, both Perth, Brisbane and Darwin have had quite high vacancy rates, and Sydney recently also had a vacancy rate above 3%, but now Perth is down to 2%, Brisbane's 2.2%, and Darwin is down to 2.7%. Sydney's rate has also fallen lately, and it's now down below 3%. Hobart, Canberra, Adelaide all have rates around 1%, which means their rental markets are very tight. Melbourne's fallen lately, and its vacancy rate is now just 1.9%. So 4 of the capital cities are below 2%, and all of them are lower than 3%. So with availability of rental property so low, we're seeing rents rising in most of the capital cities. The only cities where rents overall have not joined the growth trend are Sydney and Darwin, which both, until recently, had vacancy rates above 3%, but not any longer. So we can expect to see rents generally rising in those cities as well. Now, if vacancies are tight and rents are rising, prices are likely to be heading north as well, and that's certainly the case at the moment. The monthly price report published by CoreLogic earlier this month showed prices had risen in the past 3 months pretty much everywhere in Australia, in all the 8 capital cities and all the 7 state regional jurisdictions as well. The SQM research figures published today shows strong growth in our largest cities, with Sydney up 11%, Melbourne 9% and Brisbane around 7%. But Hobart still leads according to these figures, with house prices 14% higher than a year ago. And there are also moderate rises in cities like Canberra and Adelaide. So overall, the data shows that our property markets are very strong and well placed to handle whatever outcomes arise from the virus crisis. If you have any questions or comments about this, or indeed any other real estate matter, please contact me, Terry Ryder, on ryder@hotspotting.com.au. Bye for now.